What's up, guys? In this video, we're going to be talking about the highest percentage winning charting pattern, which is the cup and handle pattern. My personal favorite charting pattern. I believe the cup and handle is one of the easiest ones to identify. And when we get breakouts on cup and handle patterns, 95% of the time in bull markets, they have a successful win rate. So let's get into it. So as you probably already see on this chart, if you are skilled at charting yet, you can already see this beautiful cup and this beautiful. You can either call it a bull flag handle, or you can like a sideways handle, or you can call it a cup. I really don't care the way I draw it. Honestly, it really just depends. For something like this, it is pretty jagged to the outside like that, and it's less rounded. So for this one, I would probably say something in this line, but you could just do both, honestly, too. And you can call this a bull flag breakout right there, and then you can call this right here this right here. This is a breakout to the upside, and this is consolidation right above the breakout of the cup and handle. Let's draw it a little cleaner. I like to use this little arc tool, as we see here. Just drag it side to side, drop it down, grab it, drag it, drop it. Take our square, build it to the side, and you can see it a lot clearer, our cup and handle pattern. So that's how you draw it. That's how you identify it. When you get a breakout, just like any other charting pattern, 60-70% of the time, it comes back to the scene of the crime to retest before moving higher. When you get, consolidation above the cup and handle pattern, that is just kind of winding up the coil pretty tight for it to have an explosive move. And that's what I believe we were going to have in coin. This is another trade that I'm in currently because of the breakout, because of the high fives trading strategy setup, because of the Williams consolidation box. It meets my high five trading strategy. Everything's looking good on it. So I'm in this trade currently, and just kind of being patient with this consolidation until we have that big pop to the upside. So with this charting pattern, like I said, 95% of the time, when you get that breakout, it has a successful move higher. On average, the move is around 54%. But to get the actual measured move, all we're going to do is take the magnet, take the price range, drag it up from the bottom to the top, copy it, or not copy and paste it, drag it over here, and you see we have a measured move about $533 from this breakout area. We're currently at 315. So that really brings us to about almost 70% move on this name. And you can obviously go in here and say, oh, well, we have a bull flag too, like I was talking about. We broke out there. You can measure this bull flag, and it probably puts you somewhere here around 450, 425-ish. So measuring multiple patterns is really good to get you multiple, price ranges. I also like to do price ranges typically at previous support and resistance lines. Obviously, this was a pretty big resistance here. This was all-time highs where they IPO'd at. So right around 370 is also a really good location as well. So we have our measured move. We have our cup and handle drawn. We understand that when we break out, 60-70% of the time we come back to retest the cup and handle breakout area before we continue higher. And that's 60-70% on pretty much any charting pattern is the average. And as long as that holds, flips this resistance into support, we bounce and we continue higher, right? So now let's do the measured timeline, which measured timelines on any cup and handle are usually very, very drawn out. And to sit here and do them, I think is important because it gives you a time frame of when this is going to happen before. But October 2027, like I typically say, we get the move typically halfway or shorter time frame. Halfway or shorter time frame with these moves. Typically not longer or the whole drawn out. Because with these bull moves, it typically takes a lot longer, especially with these big drawn out cups, right? Because what happens in these cups and how they form is because the stock has a lot of selling pressure in it, and it kind of has to have this big sell off, but then it has to kind of figure out its business. And while it's figuring out its business, it's bottoming out and it's figuring out its business. And then buyers start coming back in saying, oh, this company's not dead. It's not going bankrupt. We're good. And then we come about, almost typically halfway to where we were at highs. And when we get to that halfway point, typically anybody that was a buyer or stock accumulator up here or even here, those people rode that didn't sell, rode this to the downside. And once we get up here, they typically say, oh my God, we finally got back to break even. I finally got back to close to break even. And I'll just take the loss now just to get out of this name with some money in my pocket still, right? So that's why typically you see a sell right here into another handle, a smaller cup, right? But it's really a handle. And you see this, and then you see buyers saying, oh, wait, we were all the way down here. Now we're here. This is a great buying opportunity. The stock's really turning around. It's really, the fundamentals are good. And then we get a breakout, which once we get the breakout, that's obviously very, 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 very bullish. And 95% of the time, you're going to get that move up to the measured move line and you're going to continue higher. So that's the cup and handle. Those are the statistics behind the cup and handle. Those are the measured moves, like you see, and that's the measured time frame. And that's kind of how I break it down. An entry for a trade would be right here at the breakout point, would be reloading and adding more at any sort of retest to the cup and handle pattern. Also reloading and adding more into any retest, then confirmation of a bounce. And as long as it stays, as long as this holds right here, even if it dips down a little bit underneath it, you got to give these things some wiggle room. So as long as it stays good in this area, then you hold, especially if you have a strategy like mine, the high five trading strategy. In the Williams consolidation box, you can easily tell when, even if it does pull back in here a little bit, maybe it's a little bit of shenanigans going on and we will continue higher. It's just a bit of a fake out. Like this cup and handle is not truly breaking out, which typically like 95% of the time it is. So taking all the probabilities, taking all the data in front of you, using your strategy to make your best possible prediction on what's going to happen. That is trading. And obviously, the more probabilities you have pointing one direction, the more likely the chances of that coming to fruition. Trading is not a 100% game. It is a let's get to between 60 and 80% win rate, and we will be profitable. We will make money along the way. So that is it for the cup and handle. Entry here. Typically, your stop loss is about halfway down the handle point, and obviously, your profit targets are wherever your measured moves are. So, hope you enjoyed this video, guys, and I'll catch you in the next one.